let's just get right into it. When you talk about what's been happening coming out of Kenya right now, some positive developments, and that cut in what is expected to be a decrease in borrowing for Kenya, how much do you expect this to play on liquidity in the Kenyan market?
It's supposed to play into liquidity in a big deal, in a big way. This is because the Ministry of Finance anticipates that by that time, the availability and demand for credit in the private sector will be higher than they had thought previously. And to get out of that market and borrow from outside seems to be the strategy of this budgetary strategy paper. At that time, you also expect to see the central bank rate falling, and hopefully inflation also falling.
I was about to ask you about the direction you think interest rates are going to take now with a development like this. What do you think is going to happen on that front?
Well, actually interest rates are easing, but very slowly. We are hoping that the indication in this paper that shows that the Ministry of Finance will not be going into the domestic market will in fact even accelerate the pace of that. The other player here is of course the central bank, who are expected also over time, between now and February hopefully, to cut the interest rate, the bank rate. The reason why they have not cut it before is that they have not been happy with the rate of inflation. It is falling, but also falling very slowly. Of course, the consumers are very unhappy with the high interest rates, and the markets have not been very happy with the way the central bank has been moving.
Professor, one of the issues that is facing a lot of economies continues to be that oil price, which is an inflationary risk to some economies, Kenya no exception as well. Are there any other domestic issues, external factors that you think will be playing on the inflation outlook for Kenya going forward?
The greatest danger is, of course, like everywhere else, global energy prices. With the recent developments in the Gulf, what you've been hearing is a possibility that oil supplies might be tight as we move on to the middle of the year. If that happens, then there is a real danger of resurgence of inflation in Kenya. Food prices may actually fall, as you mentioned at the beginning of this program, because the rains have been good. We might still need to import maize, but the general trend of food prices, which next to energy is the most important component in the inflation basket, food is not such a big danger anymore. The real danger lies in energy prices. But I should say this with regard to Kenya also. Hopefully, the Ministry of Finance will be able to rein in demand so that they can keep the public sector deficit in check as well.
Professor, I want to talk about some reports that we're hearing over here that are telling us that the Kenyan government is planning to cut development spending. How accurate are those reports?
I don't think they are correct, because basically the pressure of a higher wage bill has been contained so far within good limits. Debt servicing is under check. There is a syndicated bank loan worth $600 million, which is all but concluded, that will be coming into the Kenya budget to plug the deficit, but also primarily for investment in infrastructure. So if there's going to be a cut in the development capital budget this year, the Ministry of Finance intends to plug it by borrowing outside.
When it comes to growth or growth for Kenya, it had been hoped that growth would be about 5.7% in January. We did hear the finance minister coming out and saying that perhaps we might not see a number that good. We could be looking at probably 5.3% growth for Kenya. When you have that coming down of Kenya's growth forecast, where do you think growth is going to come from for the Kenyan economy, considering what is happening in the global economy and that we are expecting a slowdown across the globe? It's a tough
call in every way. the real the real explanatory variable for the GDP growth in Kenya falling in every year always is rainfall in this country, because it's a primarily agricultural economy, about 40%, 35% agriculture. And if the rains fail, if the climate is not good, if the weather is not good, that's one risk. And I think the prediction for rains this year is not very hopeful. Then secondly, the growth in the economies of the region, where Kenya exports a lot of our manufacturers, is for the medium term quite hopeful and quite good. The real risk lies in sectors like tourism, because that's dependent on what happens to Eurozone in the coming 6-7 months. And we're also hoping that there's going to be some movement for growth in the financial sector, possibly also in information and communications technology. These are the key drivers of growth in this economy.
Professor, I cannot let you go without asking you this. There has been concern about that 12.5 billion shillings requested for the Defense Ministry, and that's also because of operations in Somalia. And considering all these pressures that Kenya is under, how does the government justify this kind of expenditure?
Well, I think it's like in every other country when it comes to defense and the integrity of national borders. Very few people are asking questions and are asking the government to cut down the defense spending. It's not going to be possible. Kenya has suffered over the years patiently from incursions of terrorist groups originating from Somalia. You know that offshore, the shipping lanes offshore from Kenya have been so dangerous over the years, and this has increased business costs in Kenya for imports and that sort of thing. So when the government decided they're going to move in there, there was very little resistance to that in Kenya. They said the sooner we can get rid of this, we've been victims of terrorist bombings in this country. If we can put a stop to that, then so be it. I think you have a point, though. If the total cost of that expenditure continues year after year, then we're going to be in trouble. Here is what I suspect is the government strategy. The Kenya forces in Somalia have now been integrated into UNISOM. So the AU and the UN, I suppose, would pick up some of the tab.
Professor,
I think that is the strategy.
Thank you so much. We have to leave it at that. Thank you so much. A pleasure speaking to you. Thank you for joining us on the program.